So we have seen a very strong rebound in the US markets over the past 2 months on hopes that there will be rate cuts starting in March next year. And most of the markets, the US markets, has rebounded by more than 10%. So where are we right now as we end 2023? And what about 2024? Could there actually be chance of a bull market forming? Can it actually be more bullish as we begin 2024? Hey guys, Joey here, top tier miser, trader in Phillips Securities, and in this video, I'll be diving into the US markets, the Dow Jones, the S&P 500, and even the Nasdaq, and of course the STI as well, Singapore's market, to see how each of the four indices are doing. Could there be more bullishness ahead, or where do we want to be careful by some selling pressure can actually come back, right? So if you want to find out on the market outlook in terms of the technical levels or technical charts for each of the markets, the indices, the entire market for 2024, make sure you watch this video all the way to the end. Alright, so if you like this video, guys, go ahead and give me a like, smash the subscribe button as well. It will definitely help out the channel. Alright, so let's dive into the first market right now, and that will be Dow Jones. Okay, Dow Jones right here at about 37,557. So you can see that we have staged a pretty strong, I would say, rebound since the end of October, right over here, whereby we approached that 32,000 support level we've been holding since last year. So for more than a year, we've been holding above this 32,000, going up and down, and finally, right, we managed to actually stay above this 35. You can see right around here in August, right, we actually attempted to break 35,000, stayed above it, but some selling came back. There were talks about rate hikes and all that, and we sold all the way down to 32. But finally, right, just somewhere around beginning of November or mid of November, right, we managed to get back above that 35,000 psychological level for the Dow Jones and started to push up and up. And the key here is that we are pretty much back to where we were, right, somewhere in end of 2021. So it's about 2 years back, right, just before this whole rate hikes, just before this inflationary pressures getting out of control, right. That was where we were somewhere in 2021, and that would be the 37,000 level. You can see, right, that was pretty much where we were, and started to sell down and down, all right, when there were talks about rate hikes and all that over the past 2 years, right? And over the past 1 week, you can see, guys, that we are currently at about 37,557, which is above 37,000. Does it make sense, right? So we have actually broken the 37,000. Is pretty much a multi-year high right now. We have breached that 37,000 critical resistance level that's formed at the end of 2021. So that could be a good thing. We may see more bullishness as we head into 2024, because whenever we break a multi-year high or very key resistance level that we have been trading below for a year or 2 years or more, that can be meaningful. That shows that buyers are prepared to take the market even higher. I think that's pretty much a very strong finish for 2023, and even into 2024. I think we could even go into what we call a bull market as this actual rate cut starts happening in March onwards. All right, and let's take a look at the trend. All right, let's take a look at the trend for the Dow Jones. You can see that for the Dow Jones, right, as I mentioned, somewhere in August, September, October, we saw weakness in the short term. There was some selling down to about 3,000, 32,000 bargain hunting came back, and we started to see the trend reverse back up very firmly, right, with the 20 days moving average line starting to slope up right now, especially after we broke that 35,000 level. All right, and right now, this green line, this is what we call the 20 days moving average line. It is pretty much the short-term trend, or represents the trend in the short term over the next 1 or 2 or 3 weeks of a particular stock, or maybe for this case that would be the index, right, the Dow Jones, right. So short-term trend looks quite positive, especially if you can stay above this 37,000. So let me just change these rates resistance line to green in color, because now it is a support. We have been holding above it, all right, for the past 1, 2, 3, 4 days, right. So it's 4 days above it, we broke above it, we stay above it. That could be a good thing. Anything above 37,000, it looks quite bullish for the Dow Jones, right? What about the longer term? Well, you can see that for the longer term, we can look at what we call the moving averages on the 100 days moving average and the 200 days moving average. So the red line is what we call the 100 days moving average. The blue line is the 200 days moving average. So 100 days above the 200 days moving average. That means that the longer term trend is still intact. All right, it's very gradual, as you can see, right? Over the past like 2 years, the 100 days has gone above the 200 days, and it was pretty much a very slight uptrend. I would say a bit more sideways to slightly up, because short term we move up and down, but in the longer term, it was a very gradual slight uptrend as it moves slightly upwards, as it consolidated a little bit sideways from like 32,000 to 35,000. But right now, you can see that both of them are starting to point up gradually. And as I say, right, as long as we stay above 37,000, the longer term uptrend can happen much more firmly as well. All right, so this is Dow Jones. It looks quite good. I think bullish year could really happen, right, in terms of 2024 next year. And that's where you want to prepare yourself to ride many of those bullish stocks that are in an uptrend as well. Right, so let's go on to the next index, and that would be the S&P 500. S&P 500 index, right, the index that kind of like makes up the top 500 companies in the US market, and it is now at about 4,768. So before I talk about where we are right now, you can see that for the S&P 500, we have sold off, since like end of 2021, talks about rate hikes and all that. We went all the way to low about 3,600, and that was where the trend started to turn up, right, just the end of 2022, just about a year back. And of course, in the beginning of 2023, this year, we started to see what we call higher lows. So this is also called higher lows, higher lows, higher lows. And that would mean that the uptrend has just started to form. We are seeing that reversal happen, not just like last week or last month, but since the beginning of 2023, somewhere in like March, April. You can see right over here as well, the 100 days moving average, the red line actually crossed back above the blue line, and both of them actually started to point up. So the uptrend has already started to form in the longer term since the beginning of 2023. All right, but in the short term, we did see selling as well. You can see, right, we started to sell off somewhere in August. Same thing like the Dow Jones from 4,006 all the way down to 4,000, and we started to see a strong rebound. Right, so let's take a look at where we are right now to see some of the key levels that potentially lead to more upside. Right, so you can see that this is a very key level right here. That would be the 4,600 level, right? We touched one time, we sold off. That was in July, August. All right, same thing here. Came down. So this 4,006 is a pretty key resistance level that we have traded below for almost 2 years. And over the past 1 week, right, we managed to break that 4,600 level after consolidating below it for about 2 weeks. All right, we just couldn't get past it, but finally we broke the 4,006, and that is when more strength came back in the market over the past few days. Look at this, right? Up. Very strong rally after breaking this 4,600 level. And the key is that when it broke that 4,600 level, you can see that the short-term trend in terms of this 20 days moving average line, right, has started to, it's still pointing up right now. It was actually pointing up, and when it broke, you can see that the short-term trend actually started to push even higher. All right, longer-term trend, we look at what we call the 100 days and 200 days moving average. As I mentioned, right, we actually turned into an uptrend somewhere around the beginning of 2023, and right now we are still in an uptrend in the longer term. All right, so what is the key level? What is the key level that can potentially lead to more upside or even a bull market, all right, for the S&P 500 as we head into 2024? Well, I think this level is key. You can see that we are pretty much just a few hundred points, right, just below this critical resistance level. Sorry, not a few hundred, but just like 30 points, right? So 4,800 level right over here. That is pretty much where we were at the end of 2021, just about 2 years back before this rate hikes and all that stuff, and you start to see that sell down, right? So we are back to this multi-year high. For Dow Jones, we have already breached that 37,000 level we talked about, right? But for the S&P 500 yet, yes, yet to breach it, right? But we are nearing it. We are nearing this 4,800. It's 4,768, which is like about 32 points, just below that 4,800. So I think over the next 1 week, 2 weeks, I think just as we end 2023 or we begin 2024, that would be really crucial, because we might see a little bit of resistance, might see a bit of profit taking here. That's fine. But if we can do something like Dow Jones and we breach that 4,800 or maybe even that 5,000 psychological level, well, that would put this index, the S&P 500, in a really good state. We'll start to see a push in many of those top stocks like Microsoft, Apple, and all that good stocks to lead the index even higher. All right, and it could really turn into what we call a very bullish market, a bullish year, or even a bull market in 2024. Right, looking at the S&P 500 index. if it were to breach that 4,800 level. Okay, let's take a look at the tech-heavy Nasdaq Composite Index right here, trading at about 15,003. So it looks quite similar to what we call the S&P 500 index, since the beginning of the year, somewhere in like March, February. You can see that the trend started to turn up. We have turned from a downtrend last year with rate hikes and all that to what we call an uptrend. And this longer term uptrend is still intact. You can see the rate is still above the blue line. All right, it looks quite good. We are still pushing higher and higher. The reversal is still ongoing. Of course, as I mentioned, in the short term, you can still move right now, up and down, right? But the longer term, it looks good since April, May this year. All right, so it's still ongoing, right? And what is the key level whereby, I feel that in the next few weeks, or maybe as we start 2024, we could actually see a bit more upside. Well, this level is key because you can see that we were trading below this very key level, the 14,500, right over here. Yes, right over here, the 14,500 level. You can see that was where we were in July before we sold all the way down again, and somewhere around here in 2022, just beginning of last year, about 2 years back, 14,500, and we sold off. So 14,500 is a very key level whereby we have tested about 2, 3, 4 times, and we just sold off. We just sold down. That's what we call a very critical resistance level. The more times it touches and it sold back off, that will be key. So in this case, it's pretty key because it has lasted for about 2 years. We touched about 2, 3 times and it sold off. And the key here is that over the past 1 week, you can see that right here, we actually managed to break that 14,500 level right here. So now it's like 15,000, which would be a little bit of a psychological level as well. But the key here is that we have broken this 14,500 level that we have traded below for almost 2 years, and that is key. That would mean that buyers are prepared to kind of like push it a little bit higher. All right, to where? Right, well, to the next critical resistance. Remember, for the S&P 500, that would be the 4,800 level. For the Nasdaq, that will be slightly higher, all the way up to the 16,000, right? 16,000. So now it's about 15,000, another 1,000 point more, and we would be pretty much back to where we were at the end of 2021, the 16,000 level for the Nasdaq. That is a key resistance level where we touched a couple of times. We were trading below it, and the downtrend actually happened, all right, last year. So that level is key. That could be the upside, more than 5 to 8% upside here, all the way to 16,000. We might see a bit of profit taking, and same thing here. If we were to breach that 16,000 for the Nasdaq, that could really lead to more upside and even a very good bullish year in 2024 above that 16,000. All right, so it looks quite good, right? Longer term uptrend has been intact. It is still intact. The short term, well, we look at what we call the 20 days moving average line. You can see this green line was pretty much pointing up and then down a little bit, sideways, down a little bit, right? Because we saw the sell down in August, July due to talks about maybe more rate hikes, right? But somewhere around beginning of November, for about the past 2 months, the green line started to flatten out and turn back up. Right now, this green line, 20 days moving average, it is still pointing up, and we have actually breached that 14,500. So it looks quite good in the short term as well. All right, so let's see if eventually we can hit to 16,000 and even breaking that 16,000 critical level. So let's take a look at what we call the STI, Singapore's Market Straits Times Index. So you can see that for this STI, it looks a little bit different from the US market, whereby we saw a really strong push over the past 2 months due to talks about rate cuts next year. All right, and for the Singapore market, in fact, we actually sold down a little bit more. All right, and we have not seen a very strong reversal because you can see that since last year, when there talks about rate hikes and inflation and all that, Singapore market sold off, but it was not a very heavy sell down compared to the US market. It was pretty much, I would say, sideways for the Singapore market from this critical 3,000, right? 3,000 is what we call a very critical psychological support level that we have been holding, I would say, for about 3 years now, for 3 years. So as long as we stay above the 3,000, I think Singapore market still looks quite okay. All right, it's just moving sideways. Now in the short term, we are seeing a bit of weakness, but as we head towards 3,000, there could be some bargain hunting coming back again. So the range is from 3,000 all the way up to about 3,450, just around here, maybe 3,400. That's where we have seen selling. So it's about like a 4 3,000 to 3,400, so about like a 400 points kind of range that we're seeing this movement up and down sideways over the past 2 over years. All right, so what could you potentially do for the STI? Well, I would say that, as I mentioned, right, this 3,000 is a very critical support, since last year, since beginning of 2021, right, for almost 3 years, right, we have held above it. Buyers have came back. We saw market rebounding. Even last year, when there were talks about rate hikes, it has been holding quite well. So as we head towards this 3,000, there could be a possibility of it, of a potential rebound all the way up to maybe 3,003 to 3,400 levels. So if you want to take a position in what we call the STI, you can kind of like take a position in the STI ETF, right, the exchange traded fund, which pretty much tracks the STI, right? So you don't have to like kind of stock pick and all that, right? You can just pretty much buy the entire index as it heads towards this psychological 3,000 level, right? So you can see right now that the short-term trend, right? And for the short-term trend, we want to look at what we call the 20 days moving average line. You can see right over here as we approach this 3,000 level, the 20 days moving average line was pointing down, start to flatten out, and boom, right, we start to point up, and you can see that the reversal actually happened, right? So right now you can see that after selling down since like July, August, right, you can see swing down, swing up, swing down even lower, swing up, swing down even lower, up and swing down even lower. You can see that this 20 days moving average line, the green line, was pretty much pointing down, up a little bit, sideways, down more, which is correct because the trend was pretty much down in the short term and actually pushed lower. So the 20 days moving average line is actually supposed to go lower and lower. But right now, you can see that the 20 days moving average green line, it has started to kind of like, stop pointing down. It is like, let me just zoom in for you. You can see that it is slightly flattening out. Why? Because we have found pretty much the same support at around that 3,000. So 3,000 to, okay, let me just draw it for you. I think right away here in this range from 3,000 to maybe 3,100, that would be kind of like what we call the support hot zone, whereby some bargain hunting can come back again, right? So as long as you stay above that 3,000 to 3,050 to maybe even 3,100, that would be a good thing. That shows that buyers are starting to come back, right? The short-term trend has stopped pointing down, is flattening out, and eventually it starts to point up, like what we saw over here, right, over somewhere in end of 2022 over here, whereby we saw the rebound, right, or maybe somewhere over here as well, right, when the 20 days moving average was pointing down, it starts to point up, prices above it, that could lead that reversal as well, right over here. So yeah, it seems, right, we have to see whether in 2024 as we begin or maybe as we end 2023, just about 1 or 2 more weeks, if that happens, great, that would lead that reversal all the way up for the STI, and the STI could turn a little bit more bullish in the short term as well. All right, so that would be the STI. It looks slightly different from the US market, right? But it still looks okay, right? It's still not in a downtrend or anything like that. All right, we're still holding pretty well. All right, let's see if the reversal can happen all the way to like 3,004 to 3,005. And if we were to, same thing like the US, we break certain resistance level that we have been trading below for 2-3 years. In this case, like the 3,005 or the 3,004, if that happens next year, great, STI could also turn into what we call a bull market. Yes, that's it, guys. So I've pretty much covered the 4 main indices: the US market, Dow Jones, S&P 500, and the Nasdaq, and even Singapore's STI. So I hope you have a better picture of where we are right now for each of the different indices, especially if you are trading like the ETF for each of them. That's what you could do as well. All right, and you're kind of like, be clearer on some of the key levels that I mentioned, the resistance, whereby we want to stay above or we want to break it to see more bullishness into 2024. All right, so if you like this video, guys, go ahead to give me a like. All right, smash the subscribe button as well. That will really help out the channel, and thank you so much for doing it so that you will not miss out on any videos like this as well. And you want to find out a little bit more onto like this strategy, the one good trend strategy that I use to pretty much guide us on entry and exit. What are some of the top stocks? We are talking about the indices right now, but if you're looking at stocks specifically, which can have more upside, right? And if you know the strategy on when to get in, when to get out, and why do we want to focus on certain stocks, and why do we not want to focus on certain stocks as well to avoid them at all costs, you can attend one of those free webinars as well that we'll be running probably in the next 1 or 2 weeks or maybe next year. All right, you can click on the link below to find out a little bit more. Right, be on my email list, download my free report so that once the webinar is ready, all right, that's where we will inform you by email as well, and you can attend one of those free webinars to find out more, all right, and learn more about the strategy on how to pick winning stocks, get in and get out, and also how we have a system to guide us on entry and also exit as well. All right, so Joey here. All right, I'll place the link right below this video. Click on it, download my free report, be on my email list, or this private Telegram community group where we do share some of those videos and ideas as well. Right, so Joey here. Thank you so much for watching. Happy New Year to you. Merry Christmas. And I'll see you in the next video.